y'all gonna get bored trying to scam the system that can't be scammed? So I'm sitting here looking at a credit report. Credit report has 3 authorized user trade lines on it. Now you may be asking yourself, well, what's an authorized user trade line? An authorized user trade line can be a credit card where someone has added your name so you can piggyback off of someone else's credit history. Typically, it's a family member. So if you are a parent and you have a 15-year-old child, you might add them as an authorized user. They don't necessarily have to physically get a card. So as the adult or as the actual account holder, you have no consequence. Like this cannot possibly go wrong for you to allow your kid to piggyback off your credit. So people get the authorized user trade lines because let's say this person has 10 years of perfect payment history with ABC credit card. Well, now you've been added as an authorized user. You now have 10 years perfect payment history with ABC credit card. Well, of course, anytime something is allowed, we're going to always find a way to mess it up for everybody. So what has happened is people literally will allow you to pay to be an authorized user on whatever the trade line is that they have. This is Googleable. You go to the website, you pay $250 per trade line, and all of a sudden you have amazing credit.
Hey guys, welcome back to the channel. I didn't want to cut her off because she's telling the truth. When y'all gonna get tired of spending all your time, money, and energy trying to have a good credit rating while not having good credit? It's tiresome. If you would take some of that time and pay your bills on time, all the time, every time, you wouldn't have to do these things. And so as she's stating, authorized users and that strategy is nothing wrong with it. It's not illegal. It's perfectly fine if you use it in the right spirit for a family member. Okay. A lot of you guys have gone out and found some credit guru that says, you know what, you could pay me. I'm gonna stop right there. Think about it. You're paying these folks and they are adding authorized users to the accounts on these credit cards to the tune of 10, 15 people a month to extract the money out of your pocket. So much so, a lot of these credit card issuers have caught on and they cutting accounts off, and they should, because that's not what it was intended for. You see what I'm saying? And your credit is still horrible because you have not gone through the process that you need to go through to get back in good standing. It's as simple as this. Have someone, a credit issuer, issue you a line of credit. It could be a secured line of credit. The amount doesn't matter. As a matter of fact, the lower the better. That will prevent you from getting yourself in trouble. But let's say a credit issuer issues you $100 line of credit. As long as you follow this formula, never, ever, 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 ever use more than 9% of the available credit limit at any given time. Number 2, don't carry a balance. Why? So you don't get used to being in debt and paying interest. Number 3, you find out what the reporting date is on that credit card, that trade line, that revolving line of credit, and you let it report to the 3 agencies, not bureaus. They're credit agencies, Experian, TransUnion, and Equifax. And then you pay off the balance before you accrue any interest charges. But after the issuer has reported your on-time utilization, use of the card at 9% or less, and if you do that consistently every month, all the time, you will have great credit. If you have past credit ills, stop disputing stuff that's accurate. It don't go nowhere. And when you go to Credit Karma or these third-party apps that don't use the same scoring models that we use as mortgage lenders, and you get a false score and you get all excited only to come and apply and find out that your Credit Karma 800 is a Experian, TransUnion, Equifax 400, then you won't be upset and you'll have more money in your pocket because you've followed the first steps of the plan that I gave you as far as utilization. And then you're not disputing, okay? Because when you dispute, those negative trade lines are removed on the sideline and the calculation is going to be off. Instead of disputing, what you should do is settle those older balances if you can, based upon the statute of limitations in your state. And if you're not being sued or wage garnished or anything of that nature, you may not have to do anything when you apply if they're older than 2 years old, and you can carry a payment in your debt to income ratio. But she's right. Y'all will go to you know what and back to not pay your bills. And that inherently is the mindset that's keeping you in a bad way. Hopefully, something I said, something that this young lady has said, will get you to change the errors of your ways, because in 2026 and going forward, you can't do none of that anymore. All of these systems are connected, and you're going to find yourself in a bad predicament when you need some credit, because everybody needs it. Even the folks that they say have trillions of dollars, they borrow money all the time because that's the name of the game. OPM, other people's money. Let's move forward.
I know we can remove them trade lines, right? Yep. So what happens is when you go and you buy, let's say 3 authorized user trade lines, and then you come to me and I see you got 3 authorized user trade lines and you got 2 trade lines that belong to you with questionable repayment history. We can go in and we can remove those authorized user trade lines, and we can look and see, well, what do you look like all by yourself? So you've just wasted $250 per trade line to boost your credit, to get credit that we're not going to give you because you by yourself don't qualify. Being an authorized user does not attest to what your repayment history is. All you're doing is demonstrating that you know somebody who has great repayment history. So I'm just letting y'all know, don't waste your money, because we're going to know in the end whether or not you can qualify for a mortgage or not.
Judge.
So let me get this straight, because I mentioned a 620 credit score and a 0 down payment in order to purchase a home. And somebody commented on the video and said that I was out here setting up people for what happened in 2008. So let's talk about it. So first of all, what happened in 2008 was deeper than credit scores and down payments. People were getting approved for homes they couldn't afford with no income verification, no real underwriting, and adjustable rate mortgages that ballooned out of nowhere. And that's not what's happening today.
Yeah, I want to stop her. I don't know if she was around, but your boy was in business with employees, and I witnessed this firsthand. So everything that she's saying thus far is spot on. A lot of lenders and buyers, a lot of you guys out there, same mindset as the ones that want to abuse or try to game the credit system, would go around and find a lender that was out to make money, could care less about you. And so there was a lot of liar loans, meaning you could state your income. You could walk in and say, I make $200,000 a year. And there was no gig economy back then, but you could have been working at Pizza Hut. Now, you and those folks know doggone well you ain't making no $200,000 a year. Then you had what they call pick a payment loan types. And you could pick the payment that you wanted. Whole time, you're not understanding the concept of negative amortization. Like those of you that had student loans during the pandemic, where you had a forbearance and no interest was accruing if you had federal loans. But now you're out of that situation, that blessing that was afforded to you, and you decided not to pay on those student loans because you thought they were going to be forgiven. But guess what the balances are doing? They're growing. So back to the pick-up payment, just want to give you an example. Out of the 4 options, one of the payment was a fully amortized payment. But what payment do you think most people were paying? Those people that went in and said that they made $200,000 a year working at Pizza Hut. Which one you think they was paying? You're right. The lowest one that you could possibly pay. a portion of the interest. Well, what happens is with those loans that I'm mentioning in this example, they had a stop loss, if you will, a ceiling that would only let the balance grow to 110%, 110% of the current value, negative amortization. So when you were making, or those folks were making the minimum payment on a house that they should never have been in, when they got to 110% balance of what was owed, what do you think those people did? The same ones that want to game the credit system, the same ones whose character is messed up. That's why today is not 2005 really through 8, because that's when it all went down. 2008 when everybody started failing. When I say everybody, a lot of the big banks, due to the systemic nature of the foolishness that I just mentioned to you. You're here to learn, right? Another thing people were doing was this. They had hybrid loans. Okay. These folks would go through somewhat underwriting where we validated income and credit, so on and so forth. And so when I say we, I'm not talking about me, I mean the industry. Because at that time, I was pushing people to do FHA loans, even at that time, because I knew people didn't understand the adjustable rate hybrid loans. And this was the hybrid. It always equals 30 years, but you had 327s and 228s. And the 2 and the 3 portion of those loan types were fixed at a very, very low rate, a teaser rate. And then after the 2 or 3 years, they would adjust to an adjustable rate mortgage. Now, what do you think those people, the cousins to the people that said that they worked at Pizza Hut and made $200,000 and made the smallest payment on those pick-a-pay loans, these are their cousins. They went in, they said they understood, and they would fix their credit over the 2 or 3 year period. They just needed to get into the house. What do you think those people did? They didn't fix their credit because the credit score and the trade lines are a reflection of you and me, your character, collateral, capacity, the 3 C's. And so when those time frames ran out and those very low payments adjusted to what those people agreed to, what do you think happened? So we have the group that picked a payment based on the lie of their income. We have the group that never was going to fix their credit because their credit was bad going into it, and they talked themselves into believing what they wanted to believe. And then you had salesmen, commission breath people who could care less. That's why I'm on here preaching to you now, because I care. I want you to be able to get into a house and it be a blessing to you. But you got folks out here that just out here to make a commission. Buyer beware. And I'm not going to say it's on them. You see what I'm saying? It's on you. You know what you can afford. You live on the net. So when all that hit the fan, that's why then is not now. And the statement that she's making about her not setting people up to fail like 2008 is a false statement, because no one can set you up to fail, because you have to know before you owe. Let's continue.
First of all, we have very more strict lender guidelines. Secondly, there is a full income verification. A lot of banks require you, or lenders require you, to show, if you're a business owner, that you have to show 2 years of your last tax returns. Furthermore, you also have to show your bank statements, pay stubs, all that. They do a lot of verification. Ask me how, because I know. I went through the process of buying a home myself.
Shout out to her. At least she's a homeowner. Do a little research on what she's saying. Dodd-Frank, that's the reform. Dodd-Frank is what came down the pike in the lending industry, and everybody today is going to get a qualified mortgage. And if it's not a qualified mortgage, which is basically a 30-year fixed interest rate loan that has been vetted from the employment, income, and character credit standpoint, to say that these folks have the ability at the time the loan was made to make said loan for them to be able to pay it back. Dodd-Frank was the culmination of all those shenanigans that went on that caused, not just here in America, but around the world, because those loans were sold to a lot of people and a lot of investment portfolios all around the world. And so at the end of the day, the investor must be made whole. And so she's not doing anything incorrect, because you have to know that you can't afford that thing. Because that's where we really are back to, okay? We have a bunch of grown folks today that want somebody to hold their hands. So you got to humble yourself. Learn how to make your payment on time, all the time, every time. Understand that when you're buying a home, it takes money for you to maintain the home. Buying it is just a very small portion of it. The hard part, if you will, is the maintenance. So you have to know these things up front. Don't set yourself up to fail and then turn around and blame people like the young lady that we just watched because you don't understand what time it is. I would love the opportunity to have a conversation with you. My contact information is in the top pinned comment and or the description of this video. If you're not ready to make that step, you're in luck. Watch these videos here. You can continue to learn not just about the mindset, but the actual steps that you need to take until the next time. Indeed. Y'all stay blessed.